CEO of Prosper Trading Academy. Help us take a look at the number and sift through market reaction too. Scott, I know you've only had a second to take a look, but higher than analyst expectations?
Yeah, definitely. I don't think it holds quite as much weight as what we saw yesterday. And recently, the two have pretty much been aligned together. But the initial market reaction is not as friendly as it was yesterday. But I think that's going to really kind of go away, Ben. I think by the end of the day today, markets are going to be higher again. You see that probability now because of what we saw yesterday. Probability of a rate cut in September is now 90+%. We saw the 10-year, which is up, upticking a little bit right now. Saw that trade down to 416 yesterday or so, which probably was too much of a move all in one day. But, there's certainly pressure on some rates now. And you know what? This is a good thing. It kind of balances a little bit. I know that, people were looking for less than expected, but I don't think this is a bad thing at all. And I would expect the market to moderate.
Yeah, the number today, you're saying coming in a little higher than expected. Balance is out. Yesterday's number coming in a little lower than expected.
Exactly.
Scott, I like that idea, right? The idea that, again, possibly things got a little bit overdone yesterday, right? And maybe the market participants, one of the trends we've seen, not in terms of the technicals, but more the fundamentals characteristics associated with this trend, is that investors have managed to shrug off the negative, focus on the positive. I think the concern yesterday was that maybe the economy's slowing too fast, right? Maybe
For sure.
What we're seeing is, not just progress on inflation, but actually the economy starting to crater.
Right. And we've had this conversation multiple times, Ben, where we've said, be careful what you wish for, right? With all this eco data kind of slowing down a little bit. So, I think that's, probably what you saw. Everyone's talking about, is this the big rotation out of tech, from what we saw yesterday? No, I certainly don't believe so. Probably just a big overreaction yesterday, I'll be honest with you.
Well, we were talking about that, too, in terms of lack of follow-through in the overnight session here and how it wasn't a broad-based rally, right? It more seemed like it was kind of reallocation of assets in terms of from those big tech names to some of the small-cap names tied to rates, to your point, which came off at a clip. But that also concerns investors, right, to see yields falling like that.
Yeah, that's not what the market likes to see, big moves, whether it's to the downside or the upside.
Right.
And that's why I think things are going to moderate a little bit. The fact that we got back down to I think 416 was the low yesterday, maybe. That was a massive move. And, whether we're at 416, 420, or where we are right now, 425 or even higher, the market, as we know, over the last, this year, for all of this year, the market has accepted it. And I think that's going to continue.
Scott, all of this seemed to be intensified by the U.S. dollar, which fell off as well, right? A sharp move lower, somewhat tied to yields coming off, as you mentioned, but also tied to what we saw as far as the BOJ and the yen firming up significantly.
Yeah, I mean, lots to talk about. Did they dip into the market? Was there any intervention? And it certainly looks like it. That's moderating a little bit as well right now. Okay. But yes, the dollar, going under 104. Kind of the perfect storm for it yesterday between the CPI report and then what we saw with the Bank of Japan.
Scott, you mentioned that upcoming September expectations of an upcoming rate hike basically penciled in right now, almost 100% last I looked. But where does this put the Fed in terms of the second half of the year? I was arguing yesterday it sort of shelves that political kind of aspect of the discussion. Are they cutting, ahead of elections? I mean, this really gives them something concrete to sort of lean on, if they need to ultimately justify some of these decisions.
You're right. And I think what this also does, Ben, is follow a path similar to what we're seeing in Europe, where, they made one cut and said, okay, we're not going to cut next month, or we're done for now. So I think if the Fed follows that path, which would probably be at least in the in the political arena, probably the right way to do it. But if they follow that path, that removes, I believe, all of the political talk of, they're cutting for the wrong reasons.
So lastly, Scott, do you see this as something that ultimately, with stocks shrugging this off and kind of resuming status quo, does the dollar kind of find its way sort of back up into this 105 handle? Or do you see the dollar continuing to suffer here ultimately as investors try and work their way through the recent details?
I think we're going to stay pretty steady until we hear Powell speak again, or until we hear the Fed at the end of the month, just 2 weeks from now. They're not going to do anything here, but let's see what the trajectory of the next set of eco data is. I mean, we get one big number like we did yesterday, another one today, and then all of a sudden we feel like we're going to have an ease, and then just a couple weeks out is PCE, and then the new jobs report again. So there's a lot going on, but I think that the market is going to remain steady. I would expect the dollar to rally back a little bit here because I think it was overdone.
Yeah, and maybe with the focus shifting to earnings a little bit, right? It won't be in the spotlight so much as it has been. Yields as well could ultimately take a bit of a backseat role as we sort of look towards September and maybe even beyond that. I think it's July 31st Fed meeting. We've got the ECB next week that we'll be discussing and looking ahead to. Scott, appreciate you joining us here, breaking it down, taking a look at the PPI. You too, Scott. Enjoy yours. Be safe. Scott Bauer, CEO of Prosper Trading Academy.